The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. All right. Okay, it seemed to have held. Let me. All right, let me see. I'm going to give y'all a quick version here. I also gave a warning in the first go round that this one might contain some profanity. Okay. The short version is we're looking at a daily chart. Everything was moving along, a little slight pullback, lower low here. But then today, the market said, fuck it. I'm out. Okay, we got the volume bars down here. And let me explain what volume is. Volume is not, it's indirectly shares, but directly it's orders. It's order flow. Volume is orders. So one person could sell 1 million shares, and that counts as one on the volume scale. You could sell one share, but because that's 2 orders, that's just 2 orders. Okay, so volume is important because it takes a whole lot of people to make a bar that big. One person can't do that. So it requires breadth. I can't say that. BREADTH, breadth, market breadth. It takes a lot of participants to make a volume bar big like that. So that's the good thing, because that shows you that the prices are not being manipulated by one person. Okay, so this is a lot of people saying, fuck it, I'm out. Okay, so we have this low right here for the month, which occurred on the last day of January, and all of this was the move on the for the month of February, and this being just the in 3 days, the peak was here, and we're just 3 days after the high, the all-time historic high. Let me put it that way. Just this little bit of time after, the market said, fuck it. The whole month of February is essentially gone. I've said many times in this channel that prices take the stairs up and the elevator down. Fuck it. I can't make it. This picture, it just makes it clear. And this S&P 500 is linked to your retirement account. Okay, you get your retirement statement maybe quarterly. You're not going to get that statement in your hand until April. Fuck it. Okay, you're going to look at it. I mean, you just looked at the one in January as you closed out the year, and you felt pretty good about your future. Okay, you start thinking about how much longer you're going to work before you can retire. And then you're going to open that damn envelope in April, and you're going to go, what the fuck? Okay, you're going to curse. So there's profanity in this one, so you might as well start cursing now. All right. This is the time you're past the time to get that professional guidance from your retirement plan administrator, your maybe your bank or credit union, some nonprofit. Google, find you some help and ask them, what should you do if this is the end of the historic bull run that started in 2011? Again, this was the strongest bull move in the history of markets. Okay, this run from here to here. Okay, now because CC is on here, and I'm a little jealous because UK folks, this is our run in our stock market. My eyes are shot. It's like 300 and something percent, whatever. Now I'm gonna pull up the London Stock Exchange. to make 2 points. The first point is it's one world. It's one world. The developed world trade with each other. So you cannot. I was in a conversation, a diversification conversation with someone on Patreon, and I made a pretty radical statement. I'll do that while saying it. I'll make those statements because I'm right. And I can prove it. That you can't diversify by spreading your money around the world. That's a myth. That if you just put a little money in this country, put a little money in that country, that shit doesn't work. Okay, this is just my opinion. Talk to your financial advisor, but you have eyes to see. All right, our market took off around 2009. This is the London Stock Exchange. Its low was here. You can see whatever it is here. You see it's around 2010. Same general thing. Okay. I haven't even looked at this today, and this is a weekly chart. We see, and this being Monday, so this weekly candlestick is really just representing today. This is one day, because this week it's just Monday. So this one day just obliterated last week, made it low and low. Okay. But the people in my Patreon group, they know that they got this is a suspicious looking candlestick here. Looks a little resembles a shooting star. Okay, so we had a little warning, and then today we got a little confirmation of trouble with this lower low today. All right. I want to go to the daily. So this is London. Oh, what I wanted to show. I'm sorry. My own point. I'm not going to spend too much time over here. I just wanted to show you how much money they made. That's my point. I'm getting old, y'all. Got to bear with me. That was my point of wanting to show roughly how much money. Remember, our market moves 400 and something percent. And this is rough. And theirs move crap. I can't see it. Let me see this. It says, I'm sure if I did it point to point, it says 1,500, but it's really more like 2,500 if I really zoomed in and did it from point to point. So their market return was many, many times greater than ours. So if we got 400 something percent, they got 2,500% gain. So don't feel bad for them. All right. When you see on the news about all the stress and that they're going to go through as their market is tumbling, they made talk about 2,500%. So we don't have to be worried about them. They can tough it out. Stop complaining. All right. Let's see. Go back to this. Okay. Now the Dow Jones is going to pretty much be the same. All right. Then I want to show you. Oh, here. When I was on this page, what I was basically showing you is that today, what went down the most was the semiconductors. Okay. Then you got the oil, technology. This is the Qs. That would be the NASDAQ, S&P 500, and these are highly leveraged ETFs. These are triple leveraged. So these are your risky ETFs, which get additional gain by investing in like futures contracts and the like. So it's highly risky. So a lot of people, like I buy these. I trade these because I don't pick individual stocks. I pick industry groups and I trade that way, but I watch the charts. But this is very, very risky. And I'm just showing you how money flows. I'm not really recommending that you do this. I'm saying if you're interested in it, this would be something to discuss with your financial advisor that can help you determine how much risk and how much money you want to put in it, what's appropriate for you and your level of risk. This is definitely something you should absolutely avoid if you don't know how to trade, and or if you don't know how, if you don't have a financial advisor that you're working with. Okay, so if you are learning how to trade and you're using proper discipline, that's one thing. But if you don't know how and you're doing it on your own and you're undisciplined, and you just don't know what you're doing, that's crazy. Stay away. Now, this is the other side. There are bear market ETFs. These rides when the market is falling. So this is the one on the page, TVIX, the nuclear one, the Vegas play that I've called it on my channel. Okay, and it's a version of the VIX, the volatility index, also called the fear indicator. All right, and this is what that chart looks like. So this chart we're going to now is the TVIX, which is an inverse of the S&P 500. So when the S&P 500 falls, this one rises. So as we know, S&P 500 was in the strongest bull market in the history of markets. So that meant TVIX got destroyed. It got destroyed. But what you see here on the volume is orders were flowing into it as it was falling. Why? Well, people buy this TV. People that own the S&P 500 that get dividends from it, they get a dividend payment from it. There are folks out here that have millions of dollars, and they'll buy something like the S&P 500 because it is investing in 500 large companies, so it's diversified within itself. So they'll buy that and live off the dividends. There are such people that live off the dividends. When trouble comes, they may not want to sell. They may not be sure that trouble has actually arrived. So they'll go and buy this TVIX. And so they'll kind of sneak shares in, buying a little along the way. And the reason for that is if the market falls like it did today, TVIX will rise. And so the losses they have in the S&P 500 will be offset by the gains over here. And so that's what causes this thing to pop. And we see here it made a higher high. It popped above this point. And this move is all from today, a 33% gain just in today. So that's like, money coming into this thing, driving it. Okay, that works until it doesn't. At some point, that crowd of people that's buying this for insurance against their SPY or their SP 500 position, at some point, in their mind, they turn from bullish to bearish themselves. And when they make that flip, they know they sell their SPY or S&P 500 shares. And at that point, they no longer need the TVIX as an insurance policy. So the volume of people trading this starts to dry up. And that will affect the price of this. So this is risky. Okay. But it's good while it lasts. But I can't say it enough times. It's risky as hell. But this is the kind of stuff this is the kind of stuff that I trade for better and for worse. Okay. All right. I'm okay with it now. But in the beginning, when I was learning technical analysis, it was painful. Okay. But 33%, when you see that, you will see this thing move. Once it slows down, it'll probably move more like to move 8, 9, 10% a day. That's nothing. It'll do that, So this one moves double. So whatever percentage the market declines, this rises double that amount. So it's risky as hell. I'm not advocating it. I'm saying when you will see this discussed in the news, okay? Because it was the winningest move of the day in the entire stock market. Okay, so you don't want to mess with this unless you're getting some guidance. Okay, because this is not one that you set and forget either. It's nuclear. But just to make the point that not everybody's losing money. Okay. What else? I think that was the crux of it, of what I'm trying to say. What else? Oh, AMD. I brought up how AMD, because this, that semiconductor space was losing big, and this is showing you AMD in 1 week. Same thing, get me out like a house on fire. As soon as AMD goes below this low here, the selling is going to pick up, because this is a key technical level. It will make, when it makes a lower low after such an extended move, people are going to be concerned. Is this the big decline I've been hearing about, that everyone's been talking about? And you notice I didn't mention anything about no virus. I didn't mention that because it's got nothing to do with it. It's got nothing to do with this. Technically, this market was overbought and it would be falling anyway. No technical trader will disagree with what I just said. A fundamental style trader, who completely ignores or doesn't know technical analysis, they will take issue with what I said. This market would be falling anyway. So this virus didn't just start, and this virus is going to be going on for a long time. This oversold, overbought status that we're in the market, we've been in this state for a long time. This bubble had to burst at some point. These two things just happen at the same time. Do I think that the virus is making it worse? Yeah, it's another reason, psychological reason for people to sell. If we didn't have the virus, they would not have this dependent on. They would have invented some other reason. But this one sounds logical enough that might make people sell faster. But we would be falling anyway. Okay. I guess there's no way to know for sure. Let me see. Was there anything else? Let me go holler at y'all in the chat. Okay. What's up, raining woman? See over. Yeah, the market. They said the virus is good. People will accept it, but they always come up with something that sounds rational to try to describe something that I think it's just hard for people to, if you're not a technical trader, it's hard for people to accept the overbought, oversold concept. Sometimes things have just risen too high. When you're hearing on the news every day that the market is at an all-time high, that's reason enough for it to fall. It doesn't need another catalyst. Things don't just go up forever. Okay, that volume graph was showing it wasn't much sustained participation in the up move of the market. At some point, it's gonna run out of steam. It's gonna die, and you don't really need another reason. But fundamental traders are taught there's got to be a reason. Well, just because it's the longest trend in the history of civilization, that's the reason. Let's see. Enigma Inc. What's up? Ty City. What's up? Ty City's a recent subscriber. BK from the Rockies. What's up? Naima Buckner. What's up? Kwame. What's up? The broke genius. I could get with that. But what you doing to fix that, bro? You working on it? Do you know technical analysis, the broke genius? You working on it? Faber, what's happening? What's happening? Of course, Maddie goes. Fluster tree. Okay. Well, I'm gonna do something I never really do. I don't want to be on here long, but I'm gonna drop the link. How about that? And see, see if anybody. How about this? Hit the one if you want. If anybody wants to hop on. Otherwise, I can hop over here and do a little bit more study, and come back later with some more specifics about what's going on. There's some other places I suspect have made money, and I would really like to dive into that. So if you're interested, hit a one. I'm gonna give it 10 seconds or 30 seconds. If not, I'm gonna sign on out of here, and I'll thank y'all for coming by, and come check, keep your eyes open, because okay, raining. Okay, I'll drop it. Hold on. Let me get the link. All right. Yeah. So yeah, in the middle of all this other stuff on the news, don't fall for the okie doke, fam. They're gonna try to keep our attention on frivolous stuff. You don't want to have be paying attention to frivolous crap, even Trump frivolous crap. Okay, while your retirement account is being decimated, and you basically, putting keeping you in this slavery status. There's no other way to say it. If you end up working your whole life, it's it's pretty close to slavery. You know, it's sad out here. We got people working, and then when they retire, they dropping dead. That's the saddest thing. I know too many people that have retired and died like real soon after that. That's tragic. That's right. Um, I'm saying, yeah, that your favor says so. Don't hedge with TVIX. Yes, that's what people do. That's exactly what they do. They hedge with it up until the point that the people that hedge with it are people that think that this is the minor, that this is a pullback. You know. Hold on, y'all. Hold on, y'all. I got a crazy text I got to respond to. Okay, that should do it. Oh, okay. I thought Raining Woman was coming on. Okay, she hit the one. All right. Well, I'm gonna get on up out of here. See what you know. A lot of people die a year or two after. Yeah, yeah. You've noticed that too. See over here, people check out right after they retire. That's sad. That's sad. You don't want to work all your life. You want to retire when you still have some youth left, where you can, enjoy you know, enjoy yourself. But let me get out of here. I gotta my text is blowing up. It's a little distracting. All right, fam. Peace. Oh, there's just raining. There you go. Hey, lady.
Hi, good afternoon there, Donaldville. Can you hear me?
Yes, I can. Yes, I can. Good afternoon.
Okay, yeah, so I know you're trying to go and I'm not going to be too long, but seeing how you did this whole presentation and I'll be so wonderful, but we didn't hear anything. I just wanted to come up really quickly and hear how you feel the coronavirus or people's reaction to the coronavirus may or may not have an effect on the market.
I'm saying, yeah, people, it's we're talking about a pandemic. So yeah, that could cause people to sell and react in a panic. But I'm saying that
Mhm.
this market would have turned anyway.
Right.
So it's not really a cause and effect, but that's the way the news sells it. It sells that they're selling now that the market is falling because of concerns over this virus. They can't prove that.
Right. It's just to have us in our emotions, right?
Yeah, I think it's to keep us in the frame of mind that the markets move on the whim of a tweet or some other event like that. That's not the way it works. People money people invest the big money. They use technical analysis as well. You can there are many surveys to show that robots, software, automation is running a lot of these trades in the market, and those that automation is programmed with some technical analysis tenets. And so that's all technical analysis programmed in this automation. So and there's nothing in technical analysis that cares about a virus or a Trump tweet. So we were due for this um turnaround. Hold on for one second.
Hey, welcome. Keep it tacky. Hey, Josh.
Yeah, I'm sorry. I'm back. What's up, Keep It Techie? What's up? What's going on?
Okay.
So yeah, that,
Well,
uh-huh.
I will definitely be looking for your updates.
Well, thank you, Rain Woman. Thank you for your support of me. I think you were my first Patreon. I think you were day one of one.
I am. I
I
am.
think so, and I appreciate it. You support a lot of worthy channels on YouTube, the smaller channels, and I appreciate it.
Absolutely, love. Well, thank you so much, and we'll be around.
All right, everybody. Stay tuned. There should be another one coming today. I want, like I said, I got to do some more research about where else money went. Today. So peace, fam. Later.